will be attending or conducting this webinar about the implementation of standards and regulations about the fintech sector. This webinar will be an entry-level information sharing process. Actually, during this webinar, you will be notified or informed about some standards or some best practices or some regulations may be used for regulating fintech sector, especially the Europe-based. But for any detailed information or any detailed certification or any training purposes of any regulations or standards or best practices we will be talking about during this 45 or mostly 60 minutes of webinar, you can get in touch with CFE certification based on the information that we will be providing to you. Also, this webinar will be provided a 1 hour of attendance record or certification to you. But in order to get this certification from CFE Cert, you have to be with me or with us for the entire time of this webinar. So before we start, I want to introduce myself. As you can see or maybe pre-notified, my name is Umut Kılıç. I'm from Turkey, and I have a, how can I say, was at the different sides of the regulated body's point of view. I was working in a bank here in Turkey at the IT department, and I was regulated with myself alone and my team, starting very junior and ended as the head of the management systems of this one of the fintech companies in Turkey. And after that, I just switched my side to the other side of the table, let me say. And from almost over 8 or 9 years, I'm doing consultancy and training and auditing services. Some of the regulations or standards that we will be talking about during this webinar for CFE Cert in a couple of countries throughout Europe. So as we spoke, we will continue about the introduction of CFE certification. This is the independent audit organization. It is certified by some internationally recognized certification bodies like United Kingdom Accreditation Service, CAS and EIS. And in most of the countries you can see on this map of the world, CFE certification with its highly professional team of auditors and certification auditors and trainers try to provide expert analysis and also feedback mechanisms in the form of audits or trainings to its customers, mostly about the IT-based certifications or standards. So in this webinar that we will be providing in behalf of CFE certification, we will be speaking about 5 main topics. First of all, an overview of the fintech industry, which I believe that most of the attendance of this webinar is also very familiar about it or maybe a part of it. And after that, we'll be speaking about how these regulations or standards will be applied to the fintech sector. First, regulations at part 2, and 3 is about the standards, and how these regulations and standards will be integrated to each other in order to create a value-added management system run by a fintech sector organization. And we'll be speaking about some best practices. And if you have any questions, I will try to answer it. Also, you can send your questions through the chat or the YouTube chat applications as well. The questions of yours will be consolidated and notified to me by my colleagues on CFE Cert, as we are doing this webinar live, and at the end of this webinar, I will try to answer them one by one. But as I told you, this will be only an entry-level webinar. Most of the detailed questions, if you have any about any regulations or standards we'll be talking about, can be easily answered by any other trainings provided by CFE. So first of all, as we saw on our agenda, we will talk about the fintech industry overview. As we all know, it stands or short for the financial technologies. So all these traditional financial services, especially for banking or currency or exchange services, can be offered based on a more technological point of view. And this technology-based fintech services can create some opportunities as well as threats based on its own nature. So these fintech companies can provide digital transformation in many financial services, such as banking, insurance, investment, and payment services, as we all know. So the important contributions of the fintech, which means by transforming our financial services from traditional operations to fintech-based services, can create some very significant contributions to our lives, individually or corporate-based. So one of this is the accessibility. So we will, as we all know, not how can I say, chained to any physical branches or any physical working hours. So financial services can be accessible to anyone, any place at the globe with internet connections and of course our mobile devices, and it's very useful UX point of view. And also speed and efficiency is also another contribution created by the fintech, because every transaction can be much more faster and efficient and can be traceable. And of course, the cost reduction is another thing that contributed by our last by fintech, because most of the traditional financial institutions has to run some kind of branches or have to take some security measures based on a physical point of view, but all of them are just forgotten by the fintech technologies are used throughout the world in a very common way. So of course, user experience is very improved by the fintech contributions as well, because as any end user, individually or like corporate based, you can access to your financial services or your accounts or any transaction that you want to do through most of the time mobile applications or apps. And of course, this experience includes more secure way of user experience of fintech operations. Also, you can make your own reporting for yourself as again individual or corporate based, very easy way. And one last contribution of the fintech technologies running throughout the world is including different types or sizes of end users or corporate users to financial world itself, which we can say it as an unbanked individual or small businesses, because all this insurance or banking or e-invoice or such as applications can make most of the financial based or maybe accounting based operations very easy to understand and adopt and practice for many users without any proper used to needed knowledge of accounting or finance or such as. So of course, this fintech applications or operations can create some current market trends. So first of all, we have this open banking, as we all know. So the app-based data sharing between banks and fintechs also provided information as a reporting based of point of view to individuals or corporate can be created, easily have the user experience. And also this kind of financial services can be personalized to you based on your needs, based on your time zone, based on your operations, based on your risk appetite, based on your risk score. This personalized financial services or maybe offers can be differentiated for you as an end user or for financial institutions as well, based on any scores or patterns that you are created as an end user. And also, of course, digital payments and cryptocurrencies are in our lives, especially cryptocurrencies most of the times. So this kind of mobile wallets and digital currencies create both uh, secure payments, authorized payments between any more than one side of any transactions, and also blockchain-based payment solutions and decentralized finance can create a different type of payment solutions as well as money transferring executions as well, but with the risks of their own as well. We will be speaking during this webinar on the upcoming slides. Of course, the AI, the most up-to-date concept of our times, and machine learning. So any credit risk assessment or fraud detections or any anomaly tracking, this may create a based amount of the money, or this may be create of what the money is spent or transacted for, or the amount of transactions, not the amount of the money, but the amount of repeatedness, of course. And things of risk assessments and fraud detections can be done by artificial intelligence and machine learning as well. And also any financial advisor services or any help desks can be run by chatbots based on the based on the machine learning and based on the any end users behavior patterns as well. And of course, regulatory technologies are creating in here. I'm very sorry about this one. The writing about this one is stated in Turkish. I'm very sorry about this one. So I'll translate it to you. Sorry again, this unfortunate event. So especially know customer and anti-money laundering executions can be done. So it is easily understood and prevented that if any money transaction feeding any terrorism or something like that, or maybe any financial or corporate institution try to avoid taxes, or so in order to do this kind of illegal things, if any end user or corporate user uses any illegal or beyond behavior patterns transaction, then this kind of transactions can be traced based on our customer or AMI applications as well on automatic point of view. Again, very sorry about not getting this lines in English. And of course, the data protection is one of the hot topics of our world. So even regardless you are an end user or a corporate user, you are sharing your data with your financial institutions or to the other side of the transaction as well. So how can this data will be protected, or when the transaction is over, how this data will be deleted or must will be another point of consideration that has to be thought on. So the fintech technologies is also helping us to be compliant about GDPR or any other relevant data protection related regulations as well. So with the technology of fintech is rising, let me say, the automation and efficiency of the financial services, of course, increased. And it is easier to understand customer behavior using big data and analytics. So it is again easier to create personalized offers, or it is easy for fintechs to get differentiated risk scores for different point of for different type of individual or corporate customers on their own. So it's a two-way of increasing benefit in here. And also, of course, with the cloud computing, it is, let me say, nonsense to run any physical branches for traditional as a traditional banking operations, or running any huge data centers or disaster recovery centers, which we hope that never needed to be used. But of course, all these, how can I say, costs have their own opportunity costs. So this cost has to be mirrored to the financial service cost as well. So scalability and reduction operational cost, of course, create more easy way to financially accessible financial services to be provided to any customers as well. So as these kind of fintech applications and technologies rise to be used, of course, it has to be regulated in some point because uh, this applications has to be available and has to be secure for both point of view for the end users and of course the regulators itself and of course for the states and so on. So what kind of regulations can be applied to the fintech industry? So as I told you, the main goal of the standards or regulations that are going to be used for fintech creates any reliability. So you can be sure that your money will be securely spent or whatever kind of value add you will be expecting as the other part of the transaction has to be provided in a secure way. And also transparency and reporting tools can create trust between consumers and business partners between them. So you will be sure that whatever financially based transaction you are going to conduct, that it is going to be run as a counter value added thing. So you can be sure about the transparency is well set and protected. Of course, the risk management is also another point of view to be handled as a regulator by regulations because in order to any user of fintech, regardless of it is an individual or a corporate, who wants to, as we spoke on the previous slides, wants to access any fintech applications anytime or anywhere in the world and financial decisions, or even though the business making decisions can be made by the ability of accessing any financial applications or executions anytime and or anywhere. So these regulations is forcing fintechs to make their own risk assessment processes. And if anything uh, felt itself risky, let me say, to the fintech organization that may affect its availability or integrity or any confidentiality about any data or any transaction, that weakness has to be understood well before it has happened, God forbid, let's say. So risk management tools are also asking for this one to be executed as well. And of course, this reliable and risk management point of view handled fintech organizations create more stable markets. So any end user can be rely on the fintech executions is going to be done as it should be. So some of the Europe or world-based global and regional regulators and jurisdictions are set in here. These are only some kind of examples for UK or for EU or also for Singapore. This is just a couple of examples what kind of things are going to be done. So as the things done on fintech organizations, of course, the regulatory compliances also changed based on the changing risk appetite or the changing, how can I say, world conditions, circumstances. So, of course, these changing regulations create complexity between different regions or different countries for different type of laws has to be applied. So, for example, if you are running as a fintech, letting people sending money from one country to another, to different countries, some kind of different regulations or laws of their own. So, it is very hard to be more compliant for more than one regulations about the same issue. This different regulations can be raised by the different regions or different countries, as I spoke. And of course, there's a cost burden creates these regulations because in order to we are going to speak about the ISO standards or DORA or ITIL or COVID kind of stuff. So all these things are asking fintechs to execute something, as of course, and these executions sometimes need electronical investments, or sometimes need as a service investments, or sometimes need, even though this fintech is creating a non-financial, non-physical operations. Of course, some kind of data centers has to comply with some physical standards as well. So maybe construction points of view, cost borders may be created. So trying to comply with the regulations or comply or standards may create some cost burden, but I don't think that it's going to be much more than the cost of being in a risky side of any business. So, of course, the digital transformation requirements may be changed based on the updated risks, and of course, complying with international regulations using fintech organization transferring the money, of course, especially for the AML and KYC kind of view, controls will be create some cross-border transaction difficulties as well. So, of course, we are speaking about most of the frameworks or obligations or regulatories. So, what are these ones that we're speaking? As I told you in the beginning of this webinar, this is also just an entry level of information sharing process. So, just will be notified about how these different types of regulatory frameworks and obligations asking fintechs to be comply with. So first of all, Payment Service Directive 2 is a European Union directive. It's about open banking. So it is, as you see, asking for customer authentication in order to be sure that the authenticated customers are executing fintech operations. And the other one is the integration of APIs. So banks or other financial institutes can create different type of records or risk scores or reports or something like that in between them. So this account or this information sharing process has to be done by secure APIs. It is also something asked by PSD2 as well, and the consumer rights has to be strengthened. So customers have to want to get more control over their data about what kind of data these fintechs are handling about themselves and what kind of data these fintechs has to share to any legal or any third party types, or which kind of data that customers or consumers don't want it to be shared as their rights, especially if it's going to be spoken on the GDPR front as well. So, and one last thing is fighting the fraud, any financial transactions if a subject of money laundering or any, sorry for these examples, but child abuse or any terrorism kind of view, transactions are trying to be done. This kind of fraud has to be defined, and the necessary precautions has to be taken. Of course, the GDPR is with us because during these transactions, especially the GDPR is mainly about the personal identification information. So as end users to the fintechs, we are giving our personal identification information as well. Our national numbers, our bank accounts, or the explanations of the money that we are sending to other people. So this kind of stuff is can be considered as a PII. So this has to be protected by the fintech organization based on the GDPR. So first of all, the data any fintech will be processing has to be processed by a lawfulness, transparent, and accountability point of view. So if you are going as a fintech, if you are going to process any data of any PII, that the reason of your processing has to be lawful, and the reason of this processing has to be transparent and accountable for you to the owner of the PIIs. And also, these people, owner of the PIIs, has the right to be forgotten or data portability or erasure rights. So, as fintechs, it is your obligations to have an open window to your customers to reach you and send their rights about to be forgotten, and you have to comply their how can I say requirements, of course, based to be on the lawlessness as well. And if any kind of personal identification information breached from you, you have to, based on the GDPR, you have to or any fintech, not say you, but any fintech has to notify any regulatory body of EU based on the GDPR, has to notify within 72 hours. And this notification has to be forwarded by the governing bodies to owners of the PII, and fintechs has to do a risk assessment and learn from their mistakes, and what type of precautions they are going to be taken, or order taken has to be provided to any regulatory issues about the PII. And of course, any fintech has to appoint a DPO, short for data protection officer. So this person is responsible about implementing technological or process-based or physical precautions in order to protect any PIIs that's, how can I say, handled to them by their end users. And as we are going to the hot topic, to more hot or hotter topic, which is the DORA, Digital Operational Resilience Act. So DORA aims to increase the operational resilience of any fintechs to be available as they should be. And if any availability issues happened, DORA is asking fintechs to be ready about this kind of stuff to happen. And if anything's happened, just try to reduce the probability of this kind of non-availability issues happened. But God forbid, if it's happened, then do something as it was planned before, not try to find yourselves, find a way out of the dark, that we say, yeah, as it is the first time. So first of all, you have to create yourself an information communication technologies, ICT for short, risk management process. So as a fintech, you have to be known what kind of unavailability risks you can be faced and how you are going to assess them. And after that, you have to take your precautions, technical precautions. And of course, after that, you have to regularly test your environments for penetration or stress tests in order to see if your precautions taken based on your risk assessment is good enough. And of course, most of the things in our world are taken as a service. So if you have any third-party service providers providing their services to you based on service level agreements, which is going to affect the fintech's availability issues, that you have to manage them as well as you manage yourself. And if any kind of cyber attacks or operational disturbance happens, as on the GDPR, you have to notify the related regulators in order to them to notify the other fintechs to be more ready or taking any precautions that this kind of stuff happen to any fintech shouldn't be happen to another fintech as well. And one of the very old controls that we say is the AML, short for anti-money laundering, and KYC is short for know your customer. So as we spoke, the global regulations has to be taken under consideration for fintechs in order to not be any part of illegal financial or crime-based financial transactions has to be conducted. And any fintech shouldn't be a part of this type of transaction. So this fintech has to be notified or taken necessary blocking operations or actions if any transaction, as I tell to you, supports any terrorism activities or child abuse or any tax evading activities, that fintechs has to be notified about this kind of applications and notify them and block them. So first of all, you have to know your customer based on their identification, if they're real people or the fake people. If fake, just stop any transactions. And any suspicious transactions are created. These suspicions may be created by the amount of the money which is not in compliance to the behavior pattern of any transaction part, or maybe the money, the amount of money may be huge, or the little monies can be spent the frequent way in order to send a huge amount of money to the one single account in order to any crime-related activities, or names or IPs or currencies may be taken under consideration based on some predefined rules. And if any transaction, how can I say, hit these rules, then the fintechs obligated to block this kind of transaction and report them as well. And of course, you have to create different levels of monitoring based on the risky operations to be knowing that any uh, crime-based transactions has to be blocked, and you have to continuously monitor your systems, especially with digital onboarding processes as well. You have to continuously monitor your systems, continuously monitor uh, onboarded customers, the new customers of yours. As I told you, they may be fake or real, and you have to continuously monitor any transactions to be done between more than two parties. If any suspicious things happen based on the rules that predefined by you or any regulators that the fintech is working for, you have to be notified in order as a fintech, block it and report it, of course. So these are the regulations, most of the main regulations that has to be followed. So in order to meet that regulations, you have to standardize your, how can I say, electronic infrastructure, or your architecture, or your processes, or handling third parties. So how you are going to do is set by some standards. So uh, by having uh, standards in your fintech services, first of all, you can create a credibility and reputation to hold the world, because the companies like CFE Cert is world recognized and accredited companies. So if any other third party sees a logo of this kind of reputable auditing companies with the name of your fintech, this ensures the whole world that this fintech is conducting these standards as it should be, and it is audited by a reputable company, which is audited by the international accreditation bodies like UCAS, as I told you at the beginning of this webinar. Also, it can be compliant with other regulators as well. So you can provide your certifications as a fintech for any regulators, and this can create some trust between any fintech and the regulators as well. Of course, most of the ISO standards that we were speaking about mainly about managing risks. So you have to conduct risk analysis. So you can, by time, you will be reducing the risk, and as your risk is reduced, taking precautions will create less opportunity cost to you as well. And of course, the customer data security and protection of PII will be higher, and that means that kind of standards with reputable companies with logo under them will show your end users that this fintech is reputable, and it is they are doing their best to keep my data secure as it should be. And of course, the business continue to create a sustainable growth to you, and sustainable growth continue to will be another point of ISO standards as well. So what kind of standards? Mostly ISO standards, and these other best practices are in use. So ISO 27001 is the information security management system. So you have to keep any information handled to you, any end user or any customer, any corporate, to be safe based on confidentiality, integrity, and availability point of view. Also, ISO 22301 is the continuity management system. So if you, as a fintech, you want to provide financial services to be accessible anytime and anywhere, anywhere in the world, sorry, and you have to be available as much as it should be, regardless of where or when your customers are asking these fintech operations to be done. You have to be available. Also, as we spoke, you are handling this fintechs are handling person information, identifiable information as well. So this has to be protected based on GDPR. And if you are somehow conducting any card operations, credit card operations, you have to PCI DSS compliant as well. So in order to make these standards to be run as a management point of view, COBIT and ITIL standards will be helpful for you, not as a standard, but as a best practice, which handles fintechs to run management systems as it should be effectively. Also, identity security is ISO 29015 is an identity security management system as well. And of course, the hot topic will be artificial intelligence management system, which is ISO 22001. I will be trying to make you understand the requirements of these standards as we just counted. So the ISO 27001, the ICMS, Information Security Management System, mostly about creating risk assessment and protect both the information and the systems to based on a confidentiality, integrity, and availability point of view. You have to create asset inventory, which is not only physical assets as well, electronic assets and process assets as well. So you have to create a risk assessment, and based on risk assessment, you are going to apply these controls, and these controls will be protect your systems to be more safe based on confidentiality, availability, and integrity for short CIA point of view. And based on, so you will be more resilient to cyber attacks, or will be more resilient to any unavailability issues. And this certification bodies is also the internal and external audits, with audits as the certification bodies will provide certifications as a reputable company to the whole world that this fintech is conducting its operations based on a confidential, integrity, and availability point of view, managed way. Another point is this business continuity management system. There's a difference between the continuity of the 27001. It was the continuity of the systems handling information, but 22301 is your continuity for everything. So, for example, if any, how can I say, network operator of the fintech is absent that day, so how you are going to run your systems is also a concern. As just an example, I'm trying to make you understand the difference between the 22301 to the availability of 27001. So these are the differences. So